Wow, let's use AI to make a presentation. So I just want to make a presentation on market securities. I will put my command as make a presentation on market securities. So my presentation is ready. I just need to put it in PowerPoint or in an explainer video.
So for us to get the explainer video, we will head over to Pictory. It's a free app. You can sign up and register yourself, then log in. You can also choose to do a monthly billing. It's very affordable. But for this one, I'm going to use the free version of Pictory because I don't think I'll be using it frequently, so I don't need to have a consistent subscription. So when you head over to Pictory, remember Chat GPT has populated for you the content. And once you have verified the content and you feel like you will go forward with that, just head on to Pictory and start copy pasting the content from one scene to the next. And so this is how it will appear in Pictory. The introduction, you just come and copy paste it here. As you can see right now, I am looking for a nice visual to go with my first line or my first scene, which will appear as my first video in my presentation slides. So you choose for the AI voices. There's 1,000 voices which are free for you to use. So I chose the first one. I wish you could hear it, but I thought it was recording, but it didn't capture the voice. You just hear it in the end of the video. So you can preview every time after you upload something new. You can just preview to see how it all comes together. So that one is done. The first slide is done. Then the next one, I click on add. There's an add sign. You just say add. Then scene 2, you just copy paste. Then add text. If you want text on your video, there is that option. Just go back for you, depending on the content that you want to put out on the video. And so as you can see, Pictory has itself populated some visuals that will go hand in hand with my content. And so it's up to me to pick the best one from these options. And that's what I'm doing here. I'm picking the best one and I settled for this one. This is the one I picked. So the text here, it just populates itself, but I will remove it and in the end. This is just to guide my flow of content in the presentation. So we go to the next one. The next one, when you click the add sign on this presentation, it will go on with the same visual, but since you want a change, you just press on another visual and it will populate itself. Then it will have a continuous flow of content according to the visuals that you have selected. Okay, and so this is how you will create your visual presentation till the last slide that you want to present as a video with AI voice. So Pictory will incorporate the AI voice that you have selected for your content. So as I keep populating my scenes, you can edit as you need. You can change the video. If you want the same video across the content, it's also okay. It's up to you. So at this place, I'm choosing the next visual for the next slide. And it's that easy, really. It's very easy, and you will have your content ready in no time. This took me about 10 minutes to make because Pictory is the user interface is very self-explanatory. You don't need so much background research on how to use it. So it's pretty easy to use. You can have previews after previews. You can have multiple revisions of your content until you find the one that brings out your idea perfectly. And so this is how I used Pictory for my content.
An introduction to market securities. Today, we will explore the world of market securities, their types, and their role in the financial markets. What are market securities? Market securities are financial instruments that represent ownership or a creditor relationship in a publicly traded company, government entity, or other organizations. These securities are bought and sold in financial markets, allowing investors to participate in the growth and profitability of these entities. Types of market securities. 1. Stocks represent ownership in a company. Shareholders have voting rights and may receive dividends. Stocks offer potential capital appreciation but also involve risks. Bonds represent debt issued by governments, municipalities, or corporations. Bondholders receive periodic interest payments and the principal amount upon maturity. Bonds are generally considered less risky than stocks but offer lower potential returns. Mutual funds pools money from multiple investors to invest in a diversified portfolio of securities, managed by professional fund managers. Investors can buy or sell mutual fund shares at the net asset value, NAV, at the end of each trading day. Exchange-traded funds, ETFs, similar to mutual funds but traded on stock exchanges. ETFs offer diversification and can track various indices or sectors. Shares can be bought or sold throughout the trading day at market prices. Derivative securities derive their value from an underlying asset. Common types of derivatives include options, futures, and swaps. Derivatives are often used for risk management, speculation, and hedging purposes. Role of market securities. Capital formation. Securities markets provide a means for companies and governments to raise capital. Companies issue stocks and bonds to finance their operations and growth. Governments issue bonds to fund public projects and infrastructure development. Investment opportunities. Market securities offer individuals and institutional investors the opportunity to invest in various assets. Investors can build diversified portfolios to achieve financial goals. Liquidity. Securities markets provide liquidity by allowing investors to buy and sell securities easily. Liquidity ensures that investors can convert their investments into cash when needed. Price discovery. Securities markets facilitate the discovery of fair prices for securities. Prices are determined based on supply and demand dynamics. Risks associated with market securities market. Market risk. The risk of losses due to fluctuations in the overall market conditions, affected by economic factors, geopolitical events, and investor sentiment. Credit risk. The risk of default by the issuer of a security, particularly relevant for bonds, where issuers may fail to make interest or principal payments. Liquidity risk. The risk of not being able to sell a security quickly without significantly affecting its price, more pronounced for thinly traded or illiquid securities. Operational risk. The risk of losses due to internal or external operational failures. Examples include fraud, errors, or technological disruptions. Market securities are essential instruments that drive capital formation, provide investment opportunities, and facilitate liquidity. Understanding the different types of market securities and associated risks is crucial for making informed investment decisions. Questions and answers. Thank you for your attention. I